Morning, everyone. Welcome to our workshop on understanding the credit game. The Yeah, I've got a little text here. It's learn what makes up your credit score and how to take an active role in managing it, so you can definitely impact it. Joe Llanes, owner of Citrus and Gold Credit Education and Repair Services, is with us a second time on this. This is such a critical topic, just for our general finances, and he'll share his insights, simple ways to increase your credit score and protect your financial future. And looking forward to all the insights, Joe. Take it away.
Thank you. Being that yesterday was September 11th, if you guys don't mind, we'll do 10 minutes, 10 seconds of silence real quick, starting now.
Sure thing.
All right. Thank you. Appreciate that. It was a horrible tragedy and we are recovering. So to start, this is understanding the credit game. My name is Joseph Llanes. I'm from Citrus and Gold Credit Restoration. What we do is we help people figure out where there's problems in a credit score, and we try to bring them to understand it so that they can control it more in the future. It's not too many moving pieces. It's a little tricky because it's kind of like a game, hence the name. So as we begin, so a little bit about me in my past. Started my own construction company years ago. I used to get insurance quotes and trying to get loans. I was having problems because of my credit score. I had a lot of student debt. I had like 120,000 in student debt. And by the time I realized that this is what was affecting me, it was already in bad shape. So after I started to learn about why I wasn't getting approved for loans and stuff, uh, I worked on trying to get my credit score up and paying down my debt. And that kind of led me down this road where I'm at now. After fixing my credit and paying down a lot of my debt, which took quite a while, I started helping friends and family and answering questions to people who saw what I did and they wanted to have the same results. So it just became a natural thing for people to ask, for me to answer, and then that's kind of where this came about. Um, what I really try to do is help people fix their standing with their credit so that they put themselves in a better position in life. And one of the most important parts of that is understanding what makes up your score and how you can affect it simply. Um, and then when you see something negative or positive happen, you can either adjust or you can take the steps necessary to correct it. Um, so if anything, if anybody needs me to work on their credit, I work on it. And at the same time, I do have do-it-yourself kits and I do free consultations and I send you your credit report and an analysis with all the information you'll need to try to do it yourself. But uh, it does deal with a lot of legal jargon and stuff like that when you get into writing the letters. So I suggest working with me and I try to put people on the right path, whether they use me for services or they want me to just help them do it themselves. That's fine. That doesn't bother me at all. Leslie, any?
No one yet?
Okay, very good. All right. So first thing, I'm going to move this over. First thing is, what is your credit score? Your credit score is basically the prediction of how well you're going to pay a loan back, or if you're um, a high risk or of not paying back, and that'll usually determine whether you have a higher interest rate or if you get approved at all. Your credit score determines your credit limits, the approval decisions, and your interest rates. And a lot of times military and industries, whether you'll know that you'll go to get a job and they'll check your credit score. If you're in the military and you need security clearance, they'll check your credit score. So the credit score is really more tied into what they judge, what kind of person you are. So it's even more of a factor in things nowadays than it's been in the past. So we got five factors that affect your credit score. The first is your payment history. And why is it not going? Oh, there we go. Sorry about that. So payment history, it's the biggest chunk, and it's basically how are your past payments. So that's why when we have a late or a missed payment or a default or a charge off or any kind of negative payment history, these are the worst things that you can have affect your credit. Even one late can drop some people down 50 points, a little more, depending on the other accounts and your other payment histories as well. But if you have a great score and you're at an 800 and you have one late payment, it can easily jump you down 50 points just because it's a derogatory on that account. And those are very difficult for me or you to remove. Like the lates are very hard to remove, especially if it's an open account. So you want to be on time with your payments. I suggest auto pay, but that isn't always successful. So if you do auto pay, make sure you double check and make sure the auto pay is going through on that day, because I've had plenty of people put on auto pay and the payment just doesn't go through for one reason or another. So you want to check your report and see, do you have any late payments? And if you do, if they're open accounts, then what I usually do is I try to find errors on the credit report. Like if the three bureaus, one of them reports it in January, the other two report it in February, that's technically like an inconsistency or an inaccuracy on your credit report. And we use that information to try to remove the late, if not from one and then the other two later, but the reason being is because according to the federal law, your credit report has to be 100% accurate across all three bureaus. And if anybody comes to me for a consult, you'll see your full credit report. Each account will have like 15 line items. And if each line item for each bureau doesn't exactly match, then that's considered inaccurate. And it's grounds for us to request for it to be removed. And that it doesn't work right away. Tell customers all the time, you are not the client, you are the product. The credit bureaus, they're not looking to make you happy or satisfy you. They can be a little devious. They can try to mislead you, meaning what I mean by that is they'll tell you, you dispute something that's clearly inaccurate. They'll send you back a letter saying that it's verified, when in reality, if it's not 100% accurate, you should be getting it off. What we do is we send another set of letters, and we kind of like we get the jargon going a little about, how we're going to get legal people involved, or we basically threaten them with legal if they don't come through and take off the stuff that they're supposed to. It doesn't work 100% of the time, so don't get me wrong, but that's how we apply pressure. And usually if it costs them money, they fix it. If it doesn't cost them money, and they'll just placate you and then hope you don't write again, and you just keep the payment, the late payment, or the negative account running. How often should you check these things? Once every 30 days. Every credit card has its own statement date, and or any account has its own statement date. So every 30 days, a specific day of the month, each account will post. And then so every 30 days, you'll have a different in your credit score if there's any changes. So 30 days is what I suggest. And as far as your lates, so you have obviously the 30, 60, 90 days late. After that, it becomes a charge off. Once something's a charge off, that's the worst thing that you could have happen to your account. I've seen people lose 80 to 100 points if they had real good standing previously. It's all very specific to each individual, how many accounts you have, how many are paid well or paid as agreed, and how many 30, 60, 90, or charge offs that you have. Um, and that is your payment history. So make sure you pay on time as agreed. That's really all you need. As long as it's as agreed on time, you make the automatic payments of at least a minimum every month. That's the best way to keep your score from faltering. Leslie, any questions?
As a matter of fact, we do.
Yeah.
Let's see. Well, the first one is Serena wants to know where your offices are located.
Well, my office, I'm fortunate. I work out of my home. I have my office. I built an office in my basement next to my kids' room, uh, where they make soap. So, yeah, I got a nice home office. I'm out in Mastic Beach, and usually what I do is I'm either online with people or I can meet people in places. Of course, people could come here too, but between my dogs and my 6 kids, sometimes it gets a little crazy here. Yeah.
Bob has a killer question. One item he just read, if a student loan is forgiven by the government, there could be a negative impact on their credit score, maybe because they could not pay it back. Did you
Well,
know anything about this?
Well, so any account that shows that you made or failed to make payments is going to be a negative impact on your score. And that does stick around for a long time, for 7 years. So I actually do work with somebody from the National Student Debt Forgiveness Center. It's not the same thing as what went through the Supreme Court and got denied. This is a little bit different. But let's just say after after he gets the agreement and they make an X amount payments, then the government would supply a grant, pay off the loan, but that negative account will still stay there. And what it turns into at that point is I have to go and find errors on these accounts after they're closed out and get them removed. And then once they're closed out and they're paid off by the grant, in this case, if I get them removed, then they stay, they're gone. But if it's still an active collection or it's not paid off as agreed, then I could get it off and then they could put it right back on the following month when they do their report. So yes, it can hurt your score, obviously, because it's a negative account. But the only way to get it off is you have to wait until it's totally, they totally forgive the loan in actuality, like they pay it off. Otherwise, it just keeps coming back. And, I could get them off, but they'll just keep sending it back. Does that answer the question?
Bob, I think so. I think that's very interesting. That's something that should be gotten out there to more people. I had no idea about that. That changes
Yeah.
my view on
And
student
that goes
forgiveness.
with anything. Even
Yes.
like right now, specifically, I'm doing a group of 6 kids that have a Parent Plus loan with their grandfather as the co-signer. And 4 of the kids have basically finished the contract, which was you got to pay on time for 2 years to get the Parent Plus co-signer off. And that was accomplished, but they're ignoring the request to have the grandfather taken off. We did get some of them to go away. I've had like $35,000 debts taken off, and then they put it right back on. I just put them in touch with a lawyer like 2 days ago, and they're about to get into legal with it now because they're not following the contract. They kind of, like I said, you're not the client, you're the product, so they really don't do much to help you unless it's in their favor in some kind of way, like it, cost them money, and then they'll make it go away.
Okay.
I think that's good, just because like when I thought about it, it's like, well, kind of still was a debt, so there's definitely a process. Somebody could get it paid off, but then their credit history is still affected until like it's fixed, like you were saying. Very, very interesting.
Yeah, same thing with bankruptcies. Like I have tons of people come to me with bankruptcies, and they're like 4 or 5 years ago the bankruptcy happened, and they're like they never look at the report. I look at it, I'm like, oh, we got all these charge offs and bad accounts, and they're like, oh, that was a bankruptcy, that's gone. And I'm like, no, it's still there. You can't get rid of it just by paying it. Like even a regular charge off, you pay that off, they don't take the charge off away. I have to actually go in and physically find inaccuracies to get it removed by law. Again, you're not the client, you're the product, and that's part of it's kind of that's the hard part of dealing with credit bureaus in general. Anything else, Leslie?
Yes, but we're going to hold Cindy's until the end because that's going to be a really good one. That's going to take some time.
Very nice. We're gonna move to the next page. All right, credit utilization. This one's pretty easy. It's easy concept, hard to put into action, I guess you would say in some cases. So, how much do you owe? Credit utilization refers to the amount you currently owe on your credit cards. They do not factor in any personal loans, no student loans, no car loans. It's only your credit card balances. Um, the way it works is if you have $1,000 in credit and you have a balance at the end of the month of 500, your utilization number is 50%, and your score will go down because of that. Depending on how many accounts that are open that you have, they could go down. I've seen people with $1,000 debt on a $1,600 credit limit get 100 or more points just by paying off that $1,000. I've also seen people with 20, 30, 40, $50,000 in debt, pay off half of that or $30,000, and the score doesn't move that much. It'll go like 30 points. It's all very specific to how many accounts you have and what are your credit limits on these accounts opposed to your balances. Uh, so people ask all the time, how much of your credit should you be using? You should be using it as much as you need to. Remember, it's a tool, it's not a strategy. You don't want to use it as your sole way to spend. But one of the big keys is try not to spend what you can't pay off a full balance in the month. So if you're going to spend $200 on your credit card, make sure by that statement date, which we'll go over soon, make sure by statement date that you can pay that off in full. And if you can't, just realize that if you see a drop in points, it's probably because of the utilization number. The more of your available credit that is a balance or that isn't paid off, the more your score will go down. And basically, if you pay it off by the next month, you'll get those points back. But then it becomes a struggle of, if it keeps piling up and then the interest keeps piling up, that's where people fall into the credit card trap. So if you're going to spend, try to spend only what you plan on paying off by the end of the month. Keep those balances at zero. The myth of having 10% or a little balance on your card is totally not true. You don't need to leave any kind of balance on your card. But I would say don't not use the card entirely. Just use it and pay it off every month because you don't want the account to close. Because anytime you are inactive for 6 months to a year, they could automatically close you. And that again, that'll hurt your score. And that you can't really recover from as quickly because you'll have to open a new account and build up that history again on a new open account. Um, so you want to keep your utilization down, your balances at zero or close to it. Uh, one for the utilization and also because of that, insane interest that they attach to all these cards nowadays. Any questions, Leslie?
None at all.
Okay, so the length of your credit history. So with all of your accounts, the longer you have an account open and running, the account matures, right? So you can have a card that's open for 6 months and do no changes, no balance changes, keep everything the same. And then after a year, your score might jump up a little bit because the maturity of the account is actually coming into effect and affecting your score. And then I'd say roughly like a 5-year-old account is a fully mature account that you want to protect and make sure that you don't get any lates on those. Let's use the example of you have a 5-year-old account, and after 5 years, you made a oops and you got a late payment on that account. Now, if we were to try to remove the late and it didn't work, and your score was affected, but you were trying to get, let's say, a house, or let's say a house, because that's usually when it happens, because it's so important. Um, the only way to fix that would be to remove the account. But you don't want to do that. Anything that's an old, mature account, you want to protect that. That's like the holy grail. Just keep that on auto pay. Because if we were to remove a mature account, it would hurt you, 10 times more than a new account. Like if it was a 6-month-old card and we got rid of it because it was a negative at one point, it would be, it would hurt, but it wouldn't be that bad. But a 5-year account, not only would it take a lot more points, but it'll take you at least the 5 years to get back an account of that status. So when you have older accounts, just those are prized possessions. Keep those extra clean, and no lates at all is the best, obviously. Excuse me. So same thing with school loans. The longer they're there, the more of a positive effect that they have. Once they go into lates and stuff, it like multiplies how much damage they could do if you go into a late. So you really want to avoid having any lates ever, but especially on older accounts that are mature. And one of the worst things to do also is to close or cancel a credit card for no reason. If it's a card that you don't want to use anymore, or let's say you had a high balance and the interest was hurting you, so you paid it all off. Some people have the instinct to say, let's cancel it so that don't happen again. What I suggest is you pay off a card like that, and then you just let the card sit there, and it'll still be paid as agreed as long as the balance is zero. You do want to watch out for the ones with the annual fee. I just had a client that had a card for a year. She didn't realize it was even, active because she didn't have the card. It was like one she filled out on an airplane. And by the time a year came by, they put the annual fee. She didn't know it was even a bill that was coming up. And now that one's like, it's 1 month late. And I'm actually doing calls today to try to get them to remove that. Um, but yeah, so try not to cancel the cards, because the cards, you could definitely lose 50 points canceling an open card, unless it's a derogatory. If it has a bunch of lates, or it's a problem card, that's different. That'll actually help you. But if it has no lates, no problems, just let it cancel itself out if you don't want to ever use it again. Or just put something small, like a $10 charge every month, pay it to zero, and let that maturity grow, because the older the card gets, the more it helps you in the long run with your credit. Any questions, Leslie?
Oh, yes. Ariane is asking, would you please clarify, would a person need to open another account with the same company that closed it? I think she's talking, we were back on the loans, not on credit cards. She was back on the previous screen.
You don't necessarily have to go with the same company or anything like that. Basically, it's just we're going back to the last step. So you want to open, if you close out an old account, that's good. You want to open a new account so that you can start over with the good payment history, and keep it, 100% paid as agreed. Um, I'm not sure I'm totally hitting this on the head for us. So if I'm not, definitely let me know and I'll try to clarify. But it doesn't matter what company. It's just a matter of, you want to have X amount of open accounts that are in good standing. The more you have, the better it reflects. It shows that you can consistently pay on time and not have issues paying the credit that you're using.
Would she be better off closing it with that and reopening with that same company, or going to a different company?
What That doesn't really make too much of a difference. If you have a bad account with the company and you close it, they might not want to take you. So if you are on that track where you have a Capital One card and you have like two lates that you can't get rid of, and you were thinking about opening a new account, I wouldn't close that one out until you got the new account. And then maybe you could see about removing the one with the derogatories if that's what you wanted to do. But once you close out that account, you will see a quick drop in score, and it might make it so that you're not as appealing as a somebody they want to give credit to because of that. So if anything, I would, if that was something that you would think about doing, if you can't get in touch with me and call me, obviously you can. But I wouldn't close that negative account that's hurting you until you already had something set up, that you already had a new account that you could start building with.
Okay. Erin has a question. Hypothetical credit card question. If she has a balance of 1,000 on her statement and paid 300 to that balance, so her new balance on the next statement is now 700, would her credit score improve slightly or drop?
The score would definitely improve. The the ratio it would improve would be dependent on the total balances on all her cards, not just that one, as well as the limit for all her cards. So if altogether you have $10,000 in credit and it was only the 1,000 and now it's 700, you'd see a decent increase in your score. Um, but at the same time, if you paid off the one card, but somehow there was higher amounts on the other cards, it would negate it. Because it always goes with the solid number. It's your total available credit to your total balances. So it's good to attack one card at a time, that's fine, but you just got to pay attention, make sure that the other cards aren't a higher balance as well, because that could negate anything that you do with the one. It's always with the total. It's the total credit available to the total balance on credit cards, the revolving accounts, not loans, not a mortgage, not student loans. Those are looked at separately under utilization.
Bob has a terrific question. We're going to get to his a little later. But Serena says, how many open credit cards should one have to best satisfy the utilization aspect?
That's really specific to the person. If you really want to be able to control it and manipulate it easily, the simplest solution is one or less. The more you have, the more chances you have of missing a payment or an accident or something happen. It really depends on how many cards you think you need and for what reason you're using them. A healthy profile, I'd say five cards. 5 cards is healthy, as long as the balances are kept low. But again, it does increase the chances of a mistake happening or something unpredicted, like a bill and you have to use the card and you don't have the money to pay it because you're out of work, because you're sick, or whatever the case might be. But 5 is a healthy number. But to be able to control it and learn it, like in the beginning, I'd say like 1 or 2. And another big part of that is like don't apply for 5 cards at once. Usually that'll get you turned down because you look like you can't afford to live without it. So they see you as a higher risk the more inquiries you have, which we'll get into the inquiries later as well. Um, but 5 cards is healthy. Less than that is okay. It's easier to control until at least you can figure out how the game works.
Okay, Bob, I haven't forgotten your question, but we've got a couple of other ones here. Placide says they currently have no cards, but they want to know what your credit score should be in order to be able to open a card.
Okay. Well, anywhere, I mean, the lower end, and I've seen people get approved with lower, but like a 680 is something that you might get approved. 700 is like the safe number. If you're at a 700, you should get approved, but then there are other things that they take into account. Obviously history and income, that's always on there. Um, but what I suggest, if you have no cards, so the way it works is when you put in for a card, it's an inquiry. No matter what, the inquiry of you asking for credit is going to cost you 8 to 15 points off your credit score. So what I suggest to people, because if you put in an inquiry and you don't get approved, now what do? You put in another inquiry and now you're draining your points that you worked hard to get. So what I suggest to people is go to a secured credit card and start it off simple. I suggest to people, whatever company, you could go to your bank and do it. You could go to Capital One, Chase, any bank, and get like a $200 secure credit card and let that use the card, pay it off every month on time. Usually within 6 months of doing that, they'll give you back your security. So that $200 you gave them to open the card, they'll give it back to you. And then you'll still be able to use the credit card. Now it's actual credit. And then in another 6 months, if you keep paying it and paying it off on time every month down to zero, they'll most likely, especially if you ask, but most time nowadays you got to ask, but you'll get like an increase, and little by little you'll show after about a year and a half of that, you have a better chance of getting random actual credit cards. You might just get them in the mail. You might have to go out and search for them. But that's a safe, easy way, because once you do a secured card, it's very rare you get turned down for a secured card, especially from a bank. But that's something that's like an individual thing. Like in some cases, if you have a 700 score or better, you might be able to get it. But God forbid you don't get approved, and then you just lost points and you have to do the process over again. More inquiries aren't good.
Okay, we've got two related ones, and then I think we better move on because it's almost 20 of. Jason is asking, is a home equity line of credit considered as part of the utilization for the credit cards since it's revolving? Then we're going to get to Bob's question because his is a lot like this.
Yeah, so the HELOC or the home equity line of credit is not part of your utilization number at all. The only thing that'll affect is more like debt to income. Uh, but no, that has nothing to do with your utilization. Utilization is only revolving credit cards. No loans, nothing like that are counted on utilization.
Okay, Bob's is how does borrowing against a 401k or a 403b affect credit? Hopefully none because you're borrowing from yourself.
No, yeah, it doesn't affect your credit per se, unless you have some kind of a loan agreement and you miss the payment. That's really about it. But yeah, it should have no change on your credit score from that unless you have a missed payment, then that's a different story entirely.
Oh, this is a long one, but from Julie, but it is related. Her credit score dropped 100 points on a one-time late payment of $25 past the 30 days. She had already paid $4,800 with $200 balance. She was using small amounts for credit usage. And can she dispute?
So yeah, you usually can dispute no matter what it is. Like when I look at credit reports, 90% or higher, there's errors on just about every account, whether it's the date open, date closed, last payment, whatever it is, there's always something that we could use to dispute. The tough part is if it's an open account, because you don't want to really close those and it's hard to remove late payments. A lot of times what I do is I actually get on the phone with the lender or with, customer service, and I'll wait on hold. Once I get them on the phone, I'll bring the client in who lets me speak, and together we try to put together a hardship reason, and try to convince the person on the other line, please, could you remove this late? And, we paid off, we were a day late or whatever the case might be. A lot of times, if somebody will tell you no, it's as simple as calling back right away and getting a different person who might sympathize or might have gone through it themselves. I've had it happen before where I make that call, they say no, and I'm like, all right, let me try again. And I get a different person and I get a different result, and they'll tell me yes. Not 100% of the time, but it happens more than you would think.
Oh, we've got a lot of them, but we only have one more that I'd like to, well, maybe we better move on and we'll get to no, this one is about credit cards. We better. What is the best? Okay, no. What age is appropriate for someone to start building credit?
Well, what I do with my kids is I don't give them credit cards. My kids now, they have that card where you get money through the bank when you do your chores. That's how I pay them their allowance. But what I do with my kids is I pick one card specifically that is only for this. I put my children as early as 15 years old as authorized user on my card. That way, by the time they're out of high school, they have several years of credit being reported in their name with a good payment history and whatever the utilization number is, which is usually zero, especially if that's what I'm using the card for. But that's a strategy I teach parents and kids in high school. Instead of them getting their own credit card, because that could be a nightmare, put them as an authorized user as early as 15 years old. Just make sure that that card is paid off perfectly, 100% with a zero balance. And in a few years, when they go to college, they'll have their own credit score, and hopefully by then they'll understand how it works if we teach them. And that's a great start. When I started, I was totally on the other end of that. Um, but yeah, 15, I'd start getting them to report something at 15. So when they get out of high school, these kids want to get cars and things are a lot of money. And instead of putting yourself in a position to co-sign and put it on your back, you could set them up so that they at least have the opportunity to do it themselves with your help.
Okay, we'd better continue.
Okay, doke. Okay, credit mix. So your credit mix is your different types of credit loans. So obviously you got your mortgages, you got a car payment, you got a credit card, you got a personal loan. And after you have your credit cards and your simple stuff and you're building your credit, like let's just say it's our high school kid that's just graduating high school. He was authorized user, now he's got one card in high school, he's doing all right with it. What I suggest to people is before they are able to qualify for a bigger loan like a car or a house, is go to get a personal loan and other other lending instruments so that that way it's not just a credit card. You want to show that you can manage multiple different kinds of loans at the same time. It's not a giant part of your score, but credit mix, you could definitely like if you have credit cards and you're stagnant on your score, like we were talking about before, Robert, sometimes you can open a new account, like a different kind of account, like a personal loan. That's one of the strategies we do. I have my client pay down a credit card and we make a strategy to, all right, in 3 months, we're going to go, or first we'll do the secured card. In 3 months, we're going to do a personal loan. And in a couple more months, we're going to see if we can get you that car loan. If not, we're going to think of something else. Um, but the credit mix, different kind of accounts, mortgage, car, personal, credit cards. It's important to like have a good round number of different kind of lending. You don't only want to have one or the other, especially if you're going for a mortgage, because they're going to look into each one and they're going to want to see that you can handle multiple types of credit. All right, and of course, don't open accounts that you don't need. If you're gonna do it, make sure that it's like strategic. Don't just grab a personal loan for no reason. Make sure that it's because you don't have any and you're stagnant in your score is usually when I tell people to do it. And then that personal loan within like 3 months, you'll see a little boost as long as you're paying it on time as agreed. Next page is good, Leslie.
Yes, we need to keep moving.
Very good. New credit is roughly 10%. So with new credit, I say every 2 years you should be applying, unless there's other circumstances of why you're going for it. But every 2 years, it's good to get new cards. If everything's the way you want it and your credit's not horrible, You don't want to put out a bunch of new inquiries because of what we talked about before, how it affects your score negative, it'll take points away. But it also works the other way. Like if you have no new open accounts for 4 or 5 years, you'll notice that your score won't really move. Unless something bad happens, it goes down, but it makes it harder to go back up. So what I suggest to people is like every 2 years, try to find something that you can get, whether it's a personal loan or a credit card. Um, those new inquiries will give you a nice little, uh, or the new accounts will give you a nice bump in your score. Not always a giant, but when it's been 6 months and you have no change and you've been doing everything right, that 20 to 50 points, it's very valuable, especially if you know how to continue holding and maintaining that increase. It can make a big factor over time. So we have hard inquiries, like we discussed before. Whenever you open a new line of credit or a loan or anything like that, a hard inquiry is when you actually physically put your paperwork in to see if you could get approved for the loan. Like I mentioned before, those are usually 8 to 15 point negatives every time you do one. So I have clients go to get a car loan, and they don't understand that this is happening, but the car salesman will put in, trying to get them the best possible loan, will put in 5, 6, 10 inquiries, and then they wonder why their score drops. I've seen people lose like 80 points from 10 inquiries, not even knowing they got approved for the car at a crazy interest rate, and then their score dropped, and they come to me and they're like, I don't understand what happened. And I look, and they have, 8 to 10 inquiries, and that's something you want to stay away from. So as much as opening new credit lines are good, you want to do it like strategically. If you go for a loan for a car, just make sure they're running it once and get the results. So they should pick where they want to go because they'll go to multiple lenders. Um, just be careful with the hard inquiries. It takes about 2 years for those points to slowly come back. And I also can get rid of the inquiries in general if they're not an open account. But new credit's important. Just be careful with how you do it. Those hard inquiries can hurt you. A soft inquiry is when we pull your credit report and it's not reported to the bureaus. Like I use a product called Smart Credit for my clients. It helps people learn about their credit and how to run it. Those are soft inquiry. Any kind of credit monitoring app that you might use, the Credit Karma stuff like that. That's soft inquiries. They take no points away. But what they do is they allow you to see every month or whenever you want to look at it, your updated information, let you see whatever whatever you're trying to figure out, you get to look for it with those soft inquiries. It's usually a credit monitoring app that you could do that with. And if anybody needs to know about that, let me know and I'll put you on to a few of them and one I like in particular. And like I said, about every 2 years, if you don't have anything going on, I'd open up a new account, and long as everything is paid and done well, you'll see the score steadily rise. We're good for the next one, Leslie?
Well, I'm glad you asked. Cindy realizes she has to leave early and she has a question.
Okay.
Her scenario is she's selling a house using the profit to pay down debt. Is this good for her credit or not?
So if it's debt that is on open cards, yeah, that can help. It's very specific to each individual, so I don't want to tell you to take your hard gains and put them into something without knowing really more. But if it's an open account that has a balance, it can bring your utilization down and therefore your score can go up. The one benefit to that on an open account is also the interest. That's something that if you have time, you wanted to send me a text or something, I can actually take a look and tell you specifically. But if it's a charge off or a collection account, if you pay off a charge off or a collection, it has no bearing on your utilization and it will give you no score increase at all. So only on open accounts will you get any kind of score boost by paying off the debt. If it's a charge off or collection, it's not going to give you any points and nothing's going to change until you get rid of that collection off your credit report. I hope that answers the question.
Yes, it does. Thank you.
But definitely contact me and I'll help you take a look at it.
Yeah,
And
I definitely would like to get your, all your information at the end, and I would like to, definitely set up a consultation.
great, great. Yeah, no
Thank you
problem.
very much for the presentation.
Yes, ma'am. Have a good day. You ready for the next one, Leslie?
Oh, yes.
All right. Oh. Okay, this is like the most popular question I'm ever asked. What is a good credit score? Rule of thumb is 700 is a good credit score. Anything below that, it's okay. 680 to 700 is okay. Anything below 680, it's really tough to get approved for most things. Anything over 740, you're in really good shape. So I know there's a couple people in here in the 800s, and 800s are really good. You just have to make sure that you maintain them, and you basically have to watch out for unexpected things, whether it's a higher balance every month or just accidentally missed payment, which is something that we all should just try to really avoid because that's hard to fix. But 700 is like my borderline. It's either above or below. At 700, you're in good shape. Anything above that is excellent. Anything below that, you probably need to take a look at the specific things on your report and try to figure out why you're under 700. Going to the next one, Leslie.
Yes.
All right. So why do we worry about credit scores and credit reports and all this stuff? Bottom line is having a bad credit score costs you money. How much money? A lot of money. So you can see here some of these breakdowns here. You can see the small differences in the interest rate. And then if you go down to the total cost of the loan and the interest paid, you can see how much over time that you could be paying. One of the worst things is having an open credit card and there's a balance on it and it's a year no interest and then that year hits and that balance you're not able to pay off and then they're hitting you with the 20, 22, 27% interest, and then it just compiles after that. This is a little different as like home loans and stuff, but same situation. Bad credit score will cost you higher interest, especially when it comes to home and vehicles, which are really, really bad currently, in my opinion. But what you want to do is be at that 700 or better. I suggest 740. Once you're at 740 and you're going for a loan, that's the key. Sometimes you have to, make a strategy if you're going for a home loan and you're at a 720 and those 20 extra little credit, 20 extra points up to 740 on your credit score could save you a lot of money, like tens of thousands of dollars over a course of time, whether that's, 30 years or whatever the case is, whether it's a car or a house. So bad credit score costs you money. Good credit score, it can help, but still cost you money, but a lot less. You'll be able to keep a lot more of your money with a better credit score. We're good to go, Leslie?
Oh, yes. Keep going.
All right. So what to know about the credit bureaus? Like I mentioned, always remember you are not the client. They do not work for you. They're not trying to help you out. When it comes to credit bureaus, you're the product and the bank is their client. They'll always have the best interests of the lenders. So if you have a late and it was an accident, they're going to leave that late there because in some cases the banks actually own these credit bureaus as well. But then they get to charge you that extra interest and make that 10, 20, $50,000 over time, more than what they would have if they were nice and they let that late go. So during the process, if anybody's ever tried to do this by themselves, you'll notice that what I call it is a stall letter. So you'll write and be like, "Hey, this isn't correct. I need this fixed." Da 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 da. With like you're really trying to just fix something that's an error, and they'll send you back a stall letter, which it'll tell you, it'll be like, "Oh, we appreciate you trying to fix your credit, but it doesn't seem like this is you. Maybe it's a credit repair company, and they shouldn't be doing that." Or sometimes they'll just say, "Oh, we checked it. It's right. You're wrong. We're not fixing it." And that's a tactic they use to basically stall you. So you put your first letter in, you get their response that's a stall, and you say, "Oh, it's not going to work. Let me just stop." And that's what I get a lot, like on my end, because I have a lot of people come to me, and after the first month, they get these letters back, and they're like, "Oh, it's not going to work." And a lot of times I don't hear from them again, which is kind of weird, but it happens. But this is about like consistency. Like once they send me a letter or you a letter stalling, we call them out and we say, "We know that you're stalling. This is the law. This is my right. You have to do this. If you're saying it's validated, send me the method of verification validation. Like, how did you do that? I want to see the document. Prove to me that you did your research." Because by law, if they don't do the investigation within 30 days, they have to do whatever you're asking them to do. They have to do it if you could prove that they didn't. Meaning if they don't send back a actual way that they verified that it's you, or like when I send my letters out, I make sure that the license, social security card, and a proof of address, basically a letter matching the license name and address. And then I have people notarize and sign the letter before it goes in the mail, so that when they send that stall letter, now I have that in my back pocket. Be like, "All right, you're saying that you don't know it's me, yet I provided all three documents that you request, well, that are supposed to be there. Plus, it's my wet signature. Plus, it's notarized. You're, obviously trying to skirt the law. So either fix it or I'm going to seek legal advice." And a lot of times that works. That's because then they see that and they're like, "Okay, well, I don't even want to bother paying a lawyer. Let's just give them what they want. And all these other people that aren't responding back, we'll just, you know, keep going with them. Just get this guy out of our hair because now we got to do an investigation that costs money and it's work. And then if they come with a lawyer, then we got to pay the lawyer." So that's usually how we attack. If they think they're going to lose money or have to spend money, they'll usually just give up and give you what you rightfully should have in the first place. So the Fair Credit Reporting Act, that is actually what I'm always referring to with the laws. That it's pretty simple. You have to be 100% accurate. There's a lot of little pieces to it. Uh, a charge off or collections could stay on there for 7 years. There's ways to remove it. But it's a process. It's never done, well, not never. It's usually not done in one set of letters or 1 month's work. It's usually between a 3 to 6 month process. And the more negative stuff that you have on there, like a bankruptcy, it could take me like 9 months to a year to get all the items off after removing the bankruptcy. Um, but that's why it's all under the same law, but it's a matter of like it's a time and specific to each individual how you have to attack it. Uh, Make sure to check your credit once a month. That way that way you can see what's changing and you can either anticipate for next month how to fix it, whether you're paying down a balance, um, or you have an unexpected, "Oops, I didn't realize I missed something. I lost 50 points." You can sometimes by doing it quickly and getting on the phone with them, be like, "Oh, here's the payment. I'm sorry, I missed it." It's not guaranteed, but that's like I said, I'm doing that today. And usually if you do that quickly, it's a better result than waiting 3 months and then they don't even want to hear about it. They're just like, "Oh, don't worry about it. You got a late. You're going to keep that late and you're going to keep your negative points." So when you remove things off your credit report, that does not mean that you don't still owe the debt. All right, so this is like a touchy little subject for a lot of people. So when I remove things from your credit report, if there's a balance on there, you still owe that balance. But one of the ways that what we try to do is if it's a negative account that's a charge off, I'll remove the account without paying it, or I'll attempt to. And if I get that account removed without paying it, we wait. And within 60 days, we'll see whether they repost it or not. If they repost it and it shows back up on your credit report, we can try to get it off again. But usually at that point, we try to do like a settlement offer and do like a 30 to 50% of whatever that debt is so that it's satisfied, so that we can later get it off again and they won't put it back on. But there are some times where I'll get an account off. Like I've had a literal 20 something $1,000 charge off somebody's record or credit report, and it never went back on. And technically they still owe that money, but now that it's not affecting them on their credit score, there's not as much pressure to try to do anything about it. So, but just always remember, just because I get something off your credit report, if there's still a balance, legally, you still owe that money and they can send you a summons to come to court. There's strategies for that as well, but I'm not a lawyer, so I'm not going to get into that part of it. But just remember, just because it's off the credit report, if you didn't come to a settlement or pay the balance, you legally, technically still owe the money to the original creditor. When we go to do settlements, one of the things I like to do is I try to settle and do what's called a pay to delete. So I'll call them, I'll offer them 30% of whatever the balance is. If it's in collections, only on collections and past due accounts that are closed. I'll offer them 30 or 50% settlement. And once they say yes, we'll take the settlement. Then I'll ask them back, will you do it for a pay to delete? Meaning, once I pay the full balance, you guys are going to stop reporting it or take the negative item off my credit report. A lot of places won't do that at all, but you can ask. But if you could get that, that makes it simpler because once you pay that settlement, it removes, my 1 to 3 month letter process of having to keep sending letters because once you pay it, they're going to take it off and you don't have to like spend extra money on the credit repair guy sending new letters. So just remember, don't pay them unless they do a pay to delete. If they're not going to do it and they refuse, that's fine. We'll have to go the old fashioned way. But once it's settled out or paid out, then we can go and attempt to remove it and keep it off of the credit report. Always communicate through written mail. So reason being is because the written mail with the postmark, you're able to bring that into court and show. So when I get a pay to delete letter, let's say, I'll have them send me a letter saying, yes, we agree to delete this from your credit report when you pay this off. Now I have the envelope with the postmark and the letterhead with them agreeing to it. And I've had this happen before. So 3 months later, when it's paid off and they don't remove it from the credit report, we can take them to small claims and it's basically an automatic win because we have the proof. They agreed to it, they didn't do it. And damages for something like that are usually starting at $1,000 per instance. And it's not about getting the money, it's more about using that as leverage to get things off that you don't want on your credit report. But that's usually how that works. And what else we got? Leslie, any questions?
Oh, we have several, but I'd like you to keep going because it's almost 10 after. You said here there are three major credit bureaus, TransUnion, Equifax, and Experian. I thought there were five altogether, but if these are the major ones that everyone should pay attention to, please let us know. That's a lot of monitoring.
Well, yeah, for personal credit, there's three of them. There's Equifax, TransUnion, Experian. So it gets a little complicated. So those are your three basic bureaus that's what's getting checked when you go for any kind of credit or loan, so on, etc. On top of that, we have 7 bureaus that report the information to TransUnion, Equifax, and Experian. So TransUnion, Equifax, and Experian, those bureaus receive the information from 7 other bureaus. And then behind that, there's another layer of other bureaus. These are usually where like bankruptcies will be reported, and if we get them off the credit report, that's how they come back in, like a Sage Stream or one of these other bureaus will just put the information back on the board. They actually pay them for this. But yeah, those are the 3 major bureaus you're going to deal with for personal credit. The other bureaus in the background, there are 7 other ones that basically report your information. They save and report all your information. So like when you go on your credit report and you see your maiden name, let's say if you're married, or your old address from 20 years ago, all that stuff is kept on separate bureaus that report it to these 3. So another strategy that we use when it's really bad is we attack those 7 bureaus that send this information to TransUnion, Equifax, and Experian. Sometimes we'll go in there and we'll put like a block on it so they're not allowed to report, but that's a little bit more of a pain. But that's like extreme stuff. Like if I get a bankruptcy off and they keep putting it back on, then I could go put a freeze on, say, Sage Stream, and that if that's where it's coming from, the information, it'll get rid of it. But these are the main 3 that you got to look for, and that's where you'll find your scores. You won't find any scores on the other 7 that are just they're more like they're more like support for these 3 bureaus. All right, what can you do to get a better score? One, I like to tell people to monitor their credit by using something like Smart Credit. Uh, it's an easy way to look every month and see what your score is, and then with the right the right app, it will also tell you if there's a change, why you have the change, or you can find it if it doesn't tell you specifically. It's I recommend that you put all your minimum payments on auto pay, but always double check to make sure that the auto pay goes through. Sometimes I've had times where it didn't go through and people didn't realize till it was too late. But yeah, late payments and the interest of having them not go through is not worth it. Just always double check on auto pay. If you have a credit card currently, you can begin building your credit. Or if you don't have a credit card currently, like we talked about before, start with a secured credit card. They're a lot easier to get. It's going to be a lower credit limit, and it's actually going to be your own money in the beginning. But if you do, like I told you, and pay it off to zero every month, usually in within 6 months, maybe a little longer, but about 6 months, they'll offer you back your money and they'll put it back on the card so you don't have to pay that bill maybe that month or whatever. And then every 6 months, if you keep doing that, you use the card, pay it to zero on time every month. Eventually, they'll start offering you a higher limit of actual credit, and then you'll also start getting applications from them as well as other people because you have a good payment history working out. When you start with that secured card, try not to abuse it. Use it when you need it. Have a plan to use it. I usually like to tell people to put one thing on it, pay it off every month, so it's not like a big thing at the end of the month. They have a higher bill than they thought, and a lot of interest builds up eventually after that. And make sure you always pay these off before the statement date. So the statement date is a little different. We're going to get into that in a minute, but the statement date is not the due date. The due date is when it's due. The statement date is the actual date that that lender or credit card or whatever it is, they're reporting it to the bureau on one date every month. But we will get into that in a second. If you're already in debt, I suggest debt stacking. It's a snowball method, also they call it. It's pretty easy. You take all the minimum payments on whatever cards that you have and set them up so they're on auto pay. And then you take the lowest balance card and you throw all your extra money at that card until it reaches zero, right? So if you have a budget, you pay everything off and you have an extra $200. Once you pay off that last card, you have, let's say it's a minimum payment of 25 bucks and the 200 was the extra money you threw at it every month until it went away. Now you keep the same budget, but you remove that last card. You take that 200 and the minimum 25 payment, and you do it with the next lowest balance card, and you keep stacking them. And as you pay one off, you're going to add that minimum payment to the next one, like stacking the amount that you can get out. And that's one of the better ways, I think, to get rid of the debt. Other than selling the house and using the proceeds, that's always something. Or getting a personal loan that could work too with the lower interest. But debt stacking, it's very, very easy if you just have a limited budget. Uh, like we discussed before with your children, become an authorized user. Uh, now there's people online that sell things called trade lines. Technically, if you're not a member of the family and you go on somebody as an authorized user, if it could be a problem. They're not supposed to be selling trade lines. I see that a lot on TikTok and stuff. Oh, get my trade line. You have a $20,000 limit with a zero balance. That's technically not legal, but you can do it with family. So mom, dad, brother, sister, you can do that with them, no problem. And if they have a good payment history, a high credit limit with a low balance, your score can be impacted like within 30 to 60 days. You can see a jump in your score. That is sometimes a strategy we use, but people who are trying to get approved, let's say for a house, they have a time limit. Specifically, we used it last month like twice, and it worked out good. They got what they needed. And yeah, so just make sure it's somebody that you trust and they pay their bills on time, and you're not going to be worried about them missing a payment because just like the positive effects, anything negative is also going to affect you as well. Keep going, Leslie.
Keep going, Joe.
All right, what not to do. What I tell people is do not speak to debt collectors. Anybody who's trying to collect any kind of debt from you, especially on the phone, because they record it and they use that stuff later, don't speak to them. If anything, I have a on TikTok, I have a little video that basically explains how to do it. But you basically answer the phone, they ask who you are. You don't even need to give them your name or anything. You just ask who they are. When you find out it's from a debt collection service or something, just tell them, please send any information about this account to the address on file. Don't give them the address. Don't give them your name. Don't give them a phone number. Don't give them an email. At that point, it's on them to have your correct address and send it to you. If you never get the bill in the mail, they can call you till they're blue in the face, but they don't have the right address or the right information to contact you. Technically, they can't collect it unless you decide to pay them without that being the case. So don't talk to them on the phone. Tell them send it in the mail. That's the best rule of thumb if you're dealing with collections. Also know that when you speak on the phone or you do things online, you waive some of your rights that are afforded to you in the Fair Credit Reporting Act. So just be careful. I don't like to do anything online. That's why everything I do is through the mail. I send you the letters to notarize and sign. You mail them out. It's the best way, not only because you're not giving up your rights, but it also you can support it in court if you need to. You could use those as supporting documents later down the road. Um, and when they do call, you want to keep it simple. Like I mentioned before, communicate through mail to the address on file. Don't give them any other information. It's their job to have that information. If they don't have it, that's on them. Uh, Also, do not apply for any type of credit card or loan during the process of building or repairing your credit. The exception would be if you don't have any credit, or if that's our strategy and we're talking about, hey, we're going to do this to build your credit, then we do it in a controlled way, strategically. But while you're working on your own credit or somebody else is working on it, don't put any hard inquiries in, don't put any loans without discussing it with them first. It's just going to mess up the math of what we're trying to do on our end. And if you don't have a 700, try not to apply for any loans or cards. The exception would be if we discuss it and it's a strategy. We talked about the secured cards, which make it a lot easier to get approved. But if you're below a 700 and you're going in for credit cards, you're just deducting more points from your score. Whether you get the card or not, you're still going to lose points on a hard inquiry. So I don't suggest it. All right. Okay, so we're going to touch real quick on statement date. So you can see here the green and the yellow. The due date is the day that the payment is due. That's the day that your payment has to be in or it's considered late. The statement date is the day that this company or this line of credit is going to report to the bureaus. So let's say the 14th is your due date, and let's say you're late by the 30th of October, you're going to have that late show up on your credit report, and it's going to basically show a negative impact after the statement date. Before the statement date, usually it's not even going to register as a negative account. So if you get a late and you don't see the negative mark come for a couple weeks later, that's because they didn't put the statement through yet. So it's not actually on your credit report yet. Um, but what you want to do is for your balances on your credit cards, your open revolving credit cards, whatever your statement date is, you want to make the due date with the minimum payment. But let's say we're going for a house and we don't have enough to pay the whole thing off. By the due date, we do the minimum payment. And then by that statement date of whatever we pay off before the statement date will affect the utilization and make our score go up. So as long as you make that minimum due date payment, you can still affect your score if you know the statement date. You'll usually see it on the bill. It'll say statement date. A lot of times it's in red. It's either under or on top of your due date. But statement dates are important for utilization specifically because you can be going for a loan and not have the points. And if you come up with the funds before the statement date, you can get that positive increase in your score and either get the interest rate a little better or get approved in general. So pay attention to your statement date. Next time you get your bill, look for the statement date. A lot of the times it's in red. And this way, like on that day, you're going to see the results of whatever is happening, a higher balance, lower balance, whatever the case might be. Good to go, Les?
We have many questions, but we're at 20 after, so please keep going.
You do. All right, what do you do now? If you have never had any credit before, look up your credit report, no matter what. See where you stand. Find out what your score is. A lot of people don't know what their score is. They haven't looked. They don't know. They're just like oblivious to it. Make a budget for your finances and start to build the savings. No matter what, the savings is important because later down the line you want to use that savings to make you money, hopefully. Uh, Open a secured credit card. That's an easy way to start getting an easy acceptance for a line of credit and start posting positive history and utilization to help start building your credit and continue with these credit building steps for at least 6 months or until you have a 700 or higher score. You'll need to adjust what you're doing, like we talked about several times, but that is a very specific to each account. All your different things pulled together and make it different for everybody. So when that happens, like I said, I do free consults, free phone calls. The only thing I charge for is either being on the phone or writing letters for you. Other than that, I'm at your service to answer the best I can, whatever questions you might have. So don't be shy. There's no charges for questions. It's only when I'm like on settlement calls or speaking in your behalf to a creditor or a lawyer or whatever it is. Oh, backwards. Okay, so if you have bad, fair, good credit, what do you do? Same basic lineup. If they send when you do the when they have debt that they can prove that it's yours and you can't get rid of the charge off or the collection. That's what we talked about before, doing the pay to delete. Reason why we do that is, like I mentioned, sometimes you can get it off the credit report, and if it's not paid off, they can put it back on, and all the time, money, and effort that we put into fixing your credit can go right back to where it was. But usually we try to get rid of it first to see if we get rid of it and it don't come back, we're usually good. Then after that point, then we'll go and try to do settlements if they keep putting it back on. Same thing, make a budget, begin building savings, make your money work for you. As I mentioned before, take that money, invest it in whatever you see fit, whatever you're comfortable with. Continue knocking out your lines of credit. Save money in the high interest accounts is always something good and easy. Uh, and then keep writing the letters to fix whatever inaccuracies or problems you have on your credit report until it's fixed. Don't give up. They'll do that stall letter tactic. Don't just say, "Oh, they said it's right, so I'm not going to try again." That's them just trying to stall you, get you not to put in another set of letters, so you can't fix your credit, whether it's me doing it or you. And then start rebuilding your credit. Get those new accounts when you're ready. Make sure that you're ready. You don't just start getting tons of accounts. Like we mentioned, you don't want to have too many hard inquiries. It'll hurt you at first. And everybody will have to adjust these things significantly depending on, what your current situation is. So make sure, give me a call or ask somebody else who knows better than yourself and just keep going. Just don't stop. Don't get the stall letter and be the person who's like, oh, well, it didn't work. I'm gonna stop because it's gonna stay the same, if not get worse. And always remember, don't open new lines of credit while you're repairing and only communicate through the mail. I wouldn't do any phone call communication unless you're doing a pay down settlement. But don't discuss accounts without somebody I'd say without being through the mail. That's the best way because you control what's said and you also have a record of it as well. All right, so here's our disclaimer, very simple. Not a financial advisor. We're not trying to give financial advice, but any kind of questions you have about credit, I'm more than happy to answer. And I do have people that I can refer to you if you have other situations, whether it's legal or financial advisors, stuff like that, but that's for another time. And that's it. That is our program. This is my information. Again, Joseph Llanes from Citrus and Gold Credit Restoration. Got my email, website, and that is my personal cell phone. So you can text that number, call that number. If I don't answer, I'll be back in touch with you as soon as I'm off the line. Sometimes the phones get a little bit crazy, especially on like today's a settlement day. A little later at 2, I start doing settlement calls and it takes a while. But any questions, Leslie?
Oh, yes. But Joe, please leave this slide up because I thought I could copy and paste it into my, but it's not letting me do that. And I want everyone to have your contact info before they leave, even though I'm going to send it to them as well. Okay, let's see. Backed up here. Is Credit Karma, credit monitoring, a good one to use?
Yes. So Credit Karma is technically uh, credit monitoring. You'll be able to see the accounts open, closed, derogatory, good. You'll be able to see the balances as of per statement date per account. Um, so that being said, it is credit monitoring. just like the other one I mentioned was smart credit. But let me just put this little distinction. So it is credit monitoring. It will be accurate information as it's reported. Just remember that just like there's multiple credit bureaus, there's multiple scoring rubrics for your credit score. So everybody knows FICO. FICO is the big one. That's the one that they use for your cars. They use that on almost everything you're going through. There's no replacement for that. But FICO is expensive. For credit monitoring of your FICO score, it usually starts off at like $50 a month, and all you get is a look at your score and your accounts, and that's it. Credit Karma is what's called a Vantage 3, and it's very similar. It's just a different method of adding up the math to get the numbers that you'll see there. But just remember, the Vantage or the, let's say, Credit Karma or the Smart Credit is roughly 30 points. It's really 20 to 40 points different than what the FICO will be. The FICO will usually be on average 30 points higher than Credit Karma. So if you have a 620 on Credit Karma, don't be surprised when you go for a loan and you see the FICO for that same bureau, it might be 650 over or under, but it's about 30 points on average. But just realize it's not a FICO. So when you see that difference in the score, the number will go up and down comparatively for the same action. So if you have a derogatory, it'll go down. And if you have something good, it'll go up. But the numbers won't be exact for your FICO. But it's cheaper. It's, you know what I mean? Like that's free. It's not $50 a month to see it. But yeah, it is credit monitoring. You could definitely see it doesn't give you like all the details. Like you'll see the account, the balance, derogatory, charge off, whatever paid as agreed. But if you click on the account, you won't see the 15 line items that is what I use to be able to dispute things. Like it won't tell you the balance, what bank it's from. It won't tell you all these little details, and that's where we're able to find ammunition to attack these things by having all these little um, line items, basically, just all the details of the account.
Okay, the next one is how do you keep your personal info locked up from being run?
Usually that's through a credit monitoring app. There's also services, there's a few services, but they get a little bit pricey. Um, Credit monitoring apps do it well. Um, Part of what I do is while I'm doing people's letters, every month there's a part in Smart Credit that will actually tell you who is selling your information online and give you the option to remove yourself. Um, but as you go on the web, no matter what, you're going to keep getting these people getting your cookies and your information and selling them again. So I would say a good credit monitoring app um, would give you that option. Like Smart Credit specifically, I keep going back to it, but it's really got a lot of awesome tools. That's why I use it with my clients. You can every 30 days check, and once it shows up, you could just ask it to be removed, and they'll confirm it through email. They can put it back on if they get your cookie again. But credit monitoring is super helpful if you get the right one.
Serena would like to know what is the right way to go about paying off her newly acquired student loan debt? No payments are due till 2026, but interest's accruing. Does she take the little money she has to pay the interest and make dents in the principal, or should she focus on the interest only in the short term?
I mean, that's the tough one, depending on, if it's 5,000 or if it's 100,000, it makes a big difference, obviously.
I can answer
Um,
for you, Mr. Yanis. It's about 9,000 and that will double in a few months when I start my second term. So we're looking at down the line, my overall minus my interest will be about 17 and change. Currently, it's about 9.
I mean, pay down the principal would make sense. If you're not, I mean, they're still incurring interest between now and then, regardless, you said, right?
Yes,
But if you pay down the principal, then the interest will be lower in general. And it's not due till when? 2026 is when the actual payments will be marked late if you don't go through.
Yes, sir.
So what I would suggest, this is what I do with a lot of my clients. I have student debt. I work with a gentleman, like I mentioned earlier, he does student debt relief. And what he does is he will actually take your information, as long as it's a federal loan, he'll put an application in to give you the lowest possible payment, and you'll have a time schedule. Usually it's like a year, maybe 2 years. If you make all your payments on time, the lowest payment that he can possibly get you, if you finish your end of the deal, he makes a deal with the state that they will give you a grant to pay off the rest of your loan. The only thing is you'll have to claim that as earned income when that does happen, so you'll pay tax on it later.
Yes.
But that would probably be, being that you have all this time between now and then, within the 2 years when it's due, if it's a federal loan. Is it federal or is it private?
It is federal.
Yeah, so I would suggest that, because I've had people already get approved, and I've only had two people. It's been long enough for it to get it done, but it worked and they're done. Especially if you're in the medical field or any kind of emergency services, they have like extra deals for that, military, anything like that. But
I'm
give me a call later, and I'll put you in touch with my friend Joseph, and that's all he does for a living.
great. I'd really appreciate that. And I know I saw in the chat that your information will be sent out to us after this meeting finishes. Is that correct?
As far as I know,
Yes,
yes, I don't.
yes, it will. And it's also in the chat now. I don't know if you're able to save your own chat, but if you're not, that's okay. You'll be getting his contact info at the a follow-up email from me.
Okay. I did have another question on there. Is
You
it okay if
sure
I ask
did.
it?
Yes, go ahead. I was going to ask at
Okay.
the end just to give everybody a giggle at the end, but go ahead, sir.
Oh, I didn't realize it was funny, but my second question was asking if you or your company have any openings, any entry-level positions, assistant positions, or internships going on. I'm getting my master's in business administration currently. That's where the student loans are going.
Okay. Yes, and I mean it's kind of hard because I deal with people on like a very personal level. I've tried to introduce new people into the mix and it didn't get such a great response. But I
Yes.
do have three different businesses, so if you're looking for any kind of, depending on what you're looking to get into, is it like a finance end or something? You could definitely call me and we could talk about that.
Oh,
Whenever you like, really.
okay. So I'll give you a call or send you an email. Likely I'll send you an email first and I'll ask about the reference that you were giving me regarding the loans. And I'll also just throw in my resume in there for you and tell you a bit about what I'm looking for, what I'm interested in. And if you can help me in any way, I would be more than appreciative.
Yeah.
I also want to thank you for this amazing call. I am on my way to work and I am going to head out now, but I wish you the best and I really appreciate what everybody is doing here at the SBDC.
Oh,
Thank you.
thank
It
you,
means a lot.
Serena.
Believe me, it means a lot. It's like a
Oh,
personal thing for me. I appreciate hearing that. Thank you so much.
yes, you're very welcome. Thank you. Good luck, everybody. Have a great day.
You too, Serena.
Thank you.
Joe,
Yes,
what is the best soft inquiry company to use?
I'm going to say smart credit.
Okay. All
Definitely.
right.
If you want, I'll real quick go into it. But so not only do you have the availability to look at your credit and all your stuff without putting a hard inquiry,
Mm-hmm.
you'll also be able to see all the line items per account. And they also have tools on there, something that's called Score Boost, and it'll actually do the computation of how much money you need to pay on your balances on credit cards, and it'll tell you specifically how many points you should be getting, on what day to pay it, and everything. And that's just one tool. There's probably like 10 tools, whether it's uh, removing yourself from all the businesses selling your information. There's another one that's just going to basically show you all the good parts of your account, bad parts of your profile, and what you got to do about it. There's Smart Credit is amazing. And if you're my client, you'll
Also,
see that because I teach people through smart credit how to do it themselves.
okay, terrific. I'll put that into the chat as well. Someone who had to leave said, regarding your credit score, is it better to buy a condo and pay a mortgage, or is it better to rent?
Well, when you buy something like
Mm-hmm.
that, it's obviously better. The rent is basically you're paying off somebody else's mortgage, and you don't have,
Mm-hmm.
when everything's said and done, you have no equity, you have no skin in the game. Something like a condo, if you buy it and pay the mortgage, usually the mortgage is less than what the rent would be. And then at the end of the process, it's not 100% guaranteed, but as long as it appreciates or it gains in value, you're going to be able to take that with you when you go. If you rent, as soon as you're done renting, not only do you get nothing from it, but you also have to start that process all over again. So definitely, if you can own anything, own it, especially property and land, because they're not making any more property. You know what I mean? So
So just to be clear, paying your rent on time does not do anything good for your credit score. Is that correct?
no, it doesn't get reported. I mean, you can ask them to report it, but there's specific apps. I believe one's called Stella. But you can Experian has a program where you can report your utilities, but you have to sign up and pay for that as well.
Ah,
Um, but it's only if you basically have to pay for it extra to be reported.
okay. Bob Harrison, who had to leave, had an interesting question. He said when his son went to buy his townhouse, they evaluated one mortgage company and eventually did not go with the multiple ones that they went through that they had inquired through. The ones that they did not inquire through, do those get quote unquote excused because they did not go with them?
No, those hard inquiries will stay on the credit report. What I do is part of my letter process. Um, so there's personal information, inquiries, and straight up disputes where we're trying to remove bad accounts. I have a specific letter that goes for the inquiries of accounts that aren't open. Every month
Hmm.
I send the same inquiries, whatever inquiries are there, I request them to be removed. I've had good success with it. But no, they'll still have the inquiry. You have to ask them to remove it.
Okay. I hate to end this with a really difficult downer one, but Terry says trying to help someone in a family experiencing homelessness and experience says they are quote unquote unscorable. Back in 23, they filed bankruptcy, and now it's as if they don't exist because they have no current credit or payments on anything, but they're off SSDI disability and are working again for 2 full years. They would like to know how to become credit worthy again and go back to school, but they don't know where to begin as far as credit's concerned.
The first thing would just find one account that can report, meaning the safest, simplest, quickest way would be a secured credit card. Um, but once you have something that's going to report, right now he has no accounts reporting, or if they are, they're just the bankruptcies that are closed, and they're basically derogatories. One account would at least start it. I had literally this happen. A gentleman moved here from, I believe it was like West Africa about a year ago. He's here. He got married. He had a zero credit score. We looked him up, zero credit score. I said, go get your secured card. Within 60 days, he had a 700 credit score, which everybody was like, holy smoke, a 700. But it's just the way the math works. He has one
Mm-hmm.
account with a zero balance and paid as agreed.
Mm-hmm.
Start small, start simple. Get him one account, $200 credit line in his name, or even an authorized user as well. That can work, but it's not to the same effect. You want the account to actually be in his name specifically if he has a zero score.
Now,
Thank you so much.
Michelle asked a great question. She just wants to clarify. Does your credit score affect you getting employed?
100%. Your credit score, and not only does it affect whether you get employed, whether you can rent a place, it affects your insurance cost. Basically almost everything. If they can pull your credit score, it will adjust the pricing based on like what your risk value is. If you have a horrible credit score, you're going to pay not only more in interest, you're going to pay more for insurance, and you're not going to be able to get that job. Specifically in the military, there's some MOSs or jobs in the military that you can't even get the job if you don't have the right credit score. To the point where the military has its own group of people that fix their own credit for that reason.
Okay, I think we got everyone. I'm just making sure some of the people that said they had to leave, they have actually left. If anyone has any other questions, I know Joe has to go, but if you'd like to unmute and ask, but I'm going to say thank you very much. I hope everyone can see the chat. From now on, any workshops of ours online that you attend, please keep your chat open, because that's where we put the questions and that's where we put a lot of the answers. You are, as soon as you log off, you're going to receive a short survey. Please answer it. It helps us fulfill our obligation to our sponsor, who is the SBA, the Small Business Administration. And as I said before, I'm going to forward Citrus and Gold contact information from, and his last name is pronounced Llanes for anyone who's looked and went, LL. Yes, Llanes. Oh. Oh, Terry would like to know, is there one better secured card over another?
Um, Capital One's pretty good. The reason why they're, let me distinguish what makes them better. So some cards will only report to one or two agencies. I find Capital One, Chase, um, really those two are really good. Like Bank of America usually doesn't report to Equifax. So the reason why that's important is because if you're going to build up all this history and all these positive things on your credit report, but it's only going to be on two of them instead of all three, that's, it doesn't really help as much as if it was all three. So Chase, Capital One are really good. The Capital One specifically is the lowest entry of, I believe it's $200. Anybody else is going to be 300 and up. Some of them are 500 minimum. Capital One reports well, and they're pretty easy to get on secured cards.
Okay, Jason, I think you just got your answer. He says, will any bank give a secure credit card or only those that you're already affiliated with?
Usually, if you're getting a secured card, they require that you have an account, an active account. Sometimes that means you just open an account that day if that's what your plan is. Um, but yeah, usually if it's a bank, they request that you have some kind of account there. Personal account usually is like mandatory.